Did you know that when a home is sold, the property value is reassessed and taxes will change? I'm going to explain an easy way to calculate what the new taxes will be today on Experience St. John's. Welcome back. If this is our first time together, I'm Gary Davis, realtor with Coldwell Banker Vanguard Realty and creator of Experience St. John's. When you're buying a new home, property taxes are a big portion of the mortgage payment. So it's important to be able to calculate those taxes correctly so that you know just how much home you can afford. Since taxes on homesteaded properties in the state of Florida can only increase by a maximum amount of 3% per year, many home buyers think that they can base their property taxes on what the current owners are paying. That's just not true, because as soon as the home is sold, that home's value is reassessed and new property taxes are levied, and that new property tax goes into effect the following year. So the year when you buy the home, you will pay based on what the current owners are paying, and you'll pay a prorated portion of those taxes between the time you bought the home and the end of that calendar year. However, when January rolls around, taxes based on the new sales price will be assessed, and your mortgage payment may go up quite a bit. Now, taxes can be complicated, so it's important that we break it down step by step. And the first thing I want to talk about is millage rate, because that's the basis of all property taxes. Millage is a tax rate defined as dollars assessed for each $1,000 in value. 1 mill equals $1 per every $1,000 of assessed value. Each county has different millage rates, and then individual taxing districts within the county have different rates as well. The total millage rate is broken down into portions based on where the taxes are going. Those portions could include things like general county needs, roads, healthcare, and schools. A sample breakdown could look something like this. Once you know your millage rate, and the average millage rate for all the homes in St. Johns County taxing districts in 2022 is right around 13 mills, you're going to need to know your home's assessed value. Now, ultimately, the assessed value is set by the property appraiser, but an estimate for your home's assessed value would be about 80% of the home's purchase price. So if you purchase a home for $500,000 and you want to estimate your taxes, the math would look something like this. $500,000 times 80% gives an assessed value of $400,000. $400,000 times 13 mills gives total taxes of $5,200 per year. Now, if your home is homesteaded, you'll be taxed on $50,000 less than the home's assessed value. The state of Florida has other exemptions, including but not limited to senior citizens, widows and widowers, people with disabilities, and veterans. If you think you might qualify for additional exemptions, check with your tax office and they'll be able to tell you for sure. It's important to note that education taxes only give a $25,000 exemption to homesteaded properties, not $50,000. So when you're calculating your taxes, you need to take that into account. The math would look something like this, assuming that approximately 6 of the 13 mills are school-related and the remaining 7 are not, as is true in St. Johns County. So taking the example of the $500,000 property, the assessed value is $400,000, schools would tax on $375,000 times those 6 mills, giving a total of $2,250, and non-school related taxes would tax on $350,000 and multiply that by 7 mills, giving a total of $2,450. Your total taxes for this home would be $4,700. If your taxes are paid by escrow, this amount would be divided by 12 and added to your payment each month, along with your CDD fee, if you have one, and your homeowner's insurance. All of these costs come together to create a PITI or PITI payment, standing for principal, interest, taxes, and insurance. These 4 pieces make up your total mortgage payment. One other thing to note, and this is super important if you're buying new construction, is that the taxes for the year in which you buy the home will be very low because those taxes are based on the price of the unimproved land. As soon as January 1st hits and that home is reassessed based on its sales price, your taxes are going to jump way up, so don't let that surprise you. Okay, so that's all I've got for how to estimate your property taxes. Probably not the most exciting topic, but definitely an important one. If you enjoyed this video, consider subscribing to my channel and click that little bell icon so that you're notified each time I drop a new video. Oh, and if you found this video to be helpful, here's another one you might like. Thanks for watching, and I'll look forward to seeing you right back here next time on Experience St. John's.